Happy new tax year! The start of a new tax year is the perfect time to spring clean your finances. Here's a few updates from the Clearcut team on the thresholds of allowances for this tax year.
The personal allowance remains at £12,570 for this tax year. This is the amount of income you can earn before you have to pay income tax. If you, your spouse or your civil partner don't use your full personal allowance, you can transfer 10% of the unused amount to each other by using the marriage allowance, providing the receiving spouse is a basic rate taxpayer. The basic rate band remains at £37,700. This means that your income between £12,570 and £50,270 is taxed at 20%. After this, income is taxed at 40%. Anything that you earn over £125,140 is taxed at 45%. If you earn between £100,000 and £125,140, then this portion of your income is taxed at 60%. This is because your personal allowance of £12,570 is tapered down on a sliding scale for every amount that you earn over £100,000. You have a savings allowance of £1,000 for basic rate taxpayers and £500 for higher rate taxpayers. This allowance is lost entirely for additional rate taxpayers. You have to pay income tax on any amount earned in interest over these thresholds. There have been some changes to the tax on child benefit. The threshold has changed to £60,000, and the rate that child benefit tax is charged is halved, so people will lose their full child benefit once they earn over £80,000.
The capital gains tax allowance remains at £3,000. This is the amount of profit you can earn when you dispose of an asset before tax is due. Effective since the 30th of October 2024, gains, or in other words profits, which fall into the basic rate band has increased from 10% to 18%, with the same rate applicable to property gains. Gains which fall into the higher rate bands have also increased from 20% to 24%, with the same rate applicable to property gains. Starting from the 6th of April 2025, the rate of capital gains tax on business asset disposal relief and investors relief will increase from 10% to 14% for disposals made after that date. From the 6th of April 2026, the rate will rise further to 18% for disposals made on or after that time.
The annual dividend allowance will remain at £500 for the 2025-2026 tax year. Any dividend above this will be taxed at your marginal rate. Tax rates for dividend income remain unchanged. Basic rate taxpayers will pay 8.75%, high rate taxpayers will pay 33.75%, and additional rate taxpayers will pay 39.35%.
Pay into your pension. This could be a workplace pension or a personal pension. The annual allowance, which is the maximum you can pay into your pension, has increased now to £60,000. Employer and employee contributions both count towards your annual allowance. If you own a company, you can offset your pension contributions against your corporation tax bill each year. The maximum you can pay into a pension each year is limited to your UK relevant earnings. UK relevant earnings is largely your employed earnings. Pension, rental and dividend income doesn't count towards those UK relevant earnings. Basic rate taxpayers will receive 20% relief on all contributions made. Higher rate and additional rate taxpayers will receive a further 20 and 25% on top of that. If you do not have any net relevant earnings, you can still contribute to a pension. You can pay in £2,880 and you receive tax relief of £720, which gives you a total into your pension of £3,600 each year.
ISAs remain a tax efficient way to save money, as you don't pay any tax on income or gains made within the ISA wrapper. The annual ISA allowance remains £20,000 for the tax year. You can now contribute to multiple ISAs of the same type in one tax year, such as a cash ISA, a stocks and shares ISA. This will give you more flexibility over how you choose to build your wealth and earn best savings rates. The annual lifetime ISA allowance remains unchanged at £4,000, although this is part of your £20,000 annual ISA subscription. If you are saving for a house or retirement, or aged between 18 and 39, you can receive a 25% government bonus on contributions up to £4,000. This means you can earn an extra £1,000 interest a year. Penalties will apply for withdrawals other than for purchasing your first home or before the age of 60. There are also junior ISAs. The junior ISA is £9,000 per child per tax year. This is a tax efficient way to save for your children and grandchildren. Once they turn 18, the money is theirs, but they can't access it before this time.
The lifetime allowance has now been abolished. The lifetime allowance tax at age 75 on any funds in drawdown and uncrystallised remaining funds has now been removed. Instead, there are new rules which will limit tax-free lump sum payments in lifetime and in death. The tax-free lump sum allowance has been set at £268,275, but can be higher for those with lifetime allowance protections. Tax-free cash entitlement is still limited in the way that it always has, which is 25% of the value of your uncrystallised funds.
Checking your state pension forecast. The full state pension for the 2025-2026 tax year is £11,973 per year, protected by the triple lock. To qualify for the full state pension on or after April 2016, you need 35 qualifying years of national insurance contributions. So if you have any gaps in your record, it's worth considering filling them. You can buy back up to 6 years of missing national insurance contributions to top up your state pension.
The inheritance tax threshold remains at £325,000 per individual. If you have direct descendants, such as children, and own your own home, you also have a residence nil rate band of £175,000. That totals £500,000 per person, or a married couple can have a combined nil rate band of £1 million. You start to lose your residence nil rate band if your estate exceeds £2 million. If your estate is over these allowances, you can pay inheritance tax on this amount at 40%. You can give away £3,000 of your capital this tax year, and if you haven't done so last tax year, you can carry forward this relief and give away a total of £6,000 to help with gifting and reducing your estate value. As announced at the Autumn Budget 2024, from the 6th of April 2027, most unused pension funds and death benefits will be included within the value of a person's estate for inheritance tax purposes. Although this is currently under consultation, further details will be announced in due course. There are also other inheritance tax exemptions and planning considerations available. For more information on inheritance tax planning, please get in touch.
As always, if you have any questions, please don't hesitate to get in touch. We'll be going through all these allowances with you in your annual review meeting. Thanks for watching and happy new tax year.
How much editing do you have to do when you're filming these?
Are we rolling?
I'm going to start again.
Can I do it again?
No, I can't do it. Look at the camera.
I'll start again on that. A bit of a cough in the middle of it.
You can start again.
Spring clean.